Welcome to German Life 360, a channel where we uncover secrets to success in Germany. Today's video is interesting for anyone who wants to apply for a mortgage in Germany and wants to learn about the things to consider in the process. First thing that you should consider is down payment, or Eigenkapital in German. Down payment is the money that you have saved that can be used towards mortgage for buying a house. The sum of the down payment should at least cover the additional purchase costs, or Kaufnebenkosten in German. These include real estate commission or Maklerprovision, which is between 3.5 and 7% of the price of the property if it is requested. Then we have the real estate transfer tax, Grunderwerbsteuer in German, between 3.5 and 6.5% of the price of the property depending on the federal state you are in. Then we have the notary cost or Notarkosten, around 1.5% of the price. And finally we have the Grundbuchkosten or land registry costs, which is around 0.5% of the price. Additional to this mandatory legal costs, you should consider moving costs, costs for buying a furniture, a kitchen, or even renovating a house depending on the condition in which you're planning to buy it. The amount of down payment that you provide to the bank for the mortgage has an influence on the interest rate. The higher the amount, the lower the risk you present to the bank as a borrower, which translates into a lower interest rate. However, the amount of the down payment influences the interest rate only until a certain threshold, which is about 20% of the total loan. Next thing that you should consider is the mortgage duration, or Zinsbindungsfrist in German. It can usually be between 5, 10, 15, 20, 25, or even 30 years. The selected mortgage duration has an influence on the interest rate. However, selecting the best mortgage duration period can be tricky because no one can predict how the global situation or the economy would be in the long term and how that will influence the interest rates in Germany. Another thing that can influence mortgage interest rates is the key interest rate set by the European Central Bank. Moreover, the competition between the banks as well as the supply and demand on the market can also influence the interest rate. Should you compare offers of different banks? Absolutely, you should. You can also use the services of companies like Interhyp, Dr. Klein, or Hypofriend, which will compare offers of different banks for you. When comparing offers from different banks, you should consider two more things besides the interest rate. First is lump sum payment, or Sondertilgung in German. Lump sum payment allows you to pay out at the end of each year a certain percentage of your remaining loan. It's usually between 5 and 10% of the remaining amount. This way, the money that you have saved during the year can be used towards reducing your total debt. Another thing that you should consider when comparing offers between different banks is the conditions for adjusting the monthly rate, or Monatsrate in German. It is very probable that during 10 years of your mortgage contract, your income gets higher and you want to use that extra money coming in every month to increase your monthly rate. This way you can pay out your mortgage faster. Some banks allow to make this adjustment for free for a fixed number of times during the mortgage contract. Usually it's between 2 and 3 times. However, after that number is exceeded, the banks will require an additional fee for the next adjustment. It can also happen that in the duration of your mortgage contract you have unexpected expenditures in your life and you want to reduce your monthly payment rate. It is also possible using this adjustment. Another important thing that you should consider when applying for a mortgage is calculating your monthly payment rate, or Monatsrate. How do you calculate your monthly rate that best works for you? It's quite easy. You should subtract from your monthly income your expenses such as your insurance, food, vacations, cell phone contract, internet, potential future car repairs, as well as the utilities for your future house. If you want to save money on utilities by buying an energy efficient house, make sure to watch my video about this topic. You should also not forget about potential future expenses such as costs for the repairs of the house as well as facility management. The amount that is left after subtracting these expenses is actually how much you can afford to pay per month. As a rule of thumb, banks in Germany usually don't allow the monthly rate to go over 35% of your income. Finally, what you should consider when applying for a mortgage in Germany is your legal status. You're allowed to apply for a mortgage if your legal status is permanent resident, or Niederlassungserlaubnis in German. If you've enjoyed this video, please give it a thumbs up, share with your friends, and if you haven't done it yet, subscribe to my channel to continue learning about life in Germany.